I'm George Ratiu, Manager of Economic Research with Realtor.com. With half the country still in the middle of winter and the other half seeing warmer weather, we are traversing the middle part of February with an eye toward Valentine's Day heartwarming experiences. On the economic front, we continue seeing mixed signals. Some companies have been reporting record earnings while others are announcing significant layoffs. Worries over recession are growing even as the labor market contends with shortages of workers. The tension between expectations and economic data will continue to permeate for several more months. On one hand, investors have been expecting the economy to fall into a recession following the Fed's rate hikes, assuming higher borrowing costs will make it challenging for consumers to continue spending. On the other hand, the combination of a strong job market and pandemic savings mean that Americans have maintained a steady consumption pace. This week, several Federal Reserve governors, as well as Chairman Jerome Powell, spoke about the central bank's view on inflation and the economy. With the strong job report and concerns that elevated wage gains may fuel inflation for a longer period, the Fed will continue pushing the funds rate higher and keep it there for an extended time frame. Higher borrowing costs are beginning to show in the data. Consumer credit in December continued rising as households coped with higher prices, but the pace of growth was the slowest in 2 years as Americans moderated credit card, car, and student loan usage. On the jobs front, this week's unemployment insurance claims remained at low levels. While announcements of layoffs continue to grow, the combination of severance packages and a still large number of open jobs are keeping benefit filings in check. In real estate markets, this week highlighted continued softness. Mortgage rates rebounded after several weeks of declines. We can expect rates to continue moving up and down in a narrow range for the next few weeks. For first-time homebuyers, rates remain a significant barrier to affordability. At the same time, there are several undercurrents which continue to reshape market dynamics. Fannie Mae's Home Purchase Sentiment Index remained low in January as buyers felt the affordability crunch. However, the index notched a slight improvement for the third month in a row, with sellers expecting prices to pick up later this year. Meanwhile, Realtor.com's weekly data show that the number of homes for sale continues to grow, even with sellers taking a break during the winter months. Median list prices have declined from their summer peak and are moving sideways. Stay well this week. We will keep you up to date at our website and Twitter feed. Until next week.